Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. March corn continues to respect key support and resistance levels. Last week, we suggested that 343 3/4 would be good support. The market came in, made a low near that level, and that's exactly what held. And from that time forward, we can see the market made an advance all the way back up to resistance at 362.5. This is where we found resistance yesterday. The market's given back a bit today, and we would not be surprised to continue to see the market here potentially oscillate back and forth inside of support and resistance with the potential of maybe breaking out to about 372 or slightly higher than that level. For now, we do have key resistance overhead near that 360-degree mark, and so that would be in particular where we would expect some good selling to continue to come in. The markets are going to probably be a little bit sideways the next day or two as we have the next supply and demand report due for December 9th in the next couple of days, but that report historically does not move the market very much. From this view, we can see where our point of control levels, in conjunction with our Fibonacci retracement levels, played a key role in that support that we found last week. At 341 3/4, or essentially near 342, is where again support came in, but the point of control, one standard deviation below it, we have 361.5, which is where we found resistance, and then another standard deviation below that level at 342 1/4 is basically where we found support. We can see the market here coming in, working together in the confluence of key levels, giving us our key support and resistance levels. Once the market's able to break through either of these key components is where we expect to see some good follow through. And our anticipation right now is that the 342 level should hold through the balance of the year. And what we're looking for is once the market's able to clearly break through that 360 area with good strength, that we'll continue to see some continued movement to the upside. For January soybean, we can see where our sinusoidal resistance level in conjunction with volatility-based resistance came in to give us a very good top for the market. The market then declined, and last week we talked about 1018 being a very good potential support level if the market was able to hold there for the market to perhaps turn its way back up again. We find ourselves near key resistance at 1050.5, and so from here we can see the market just struggling just slightly but continues to have moderate strength on the way up. It would not come as a surprise to see the market make a nice advance up to about 1083, but for now we'll continue to monitor and watch as we approach the upcoming USDA report on Friday. Here we can find some instances where support and resistance did their job very well. We had our time factor come in to give us a projected top. The market since then has moved down. We can see here good support came in at one of our key support levels. That support level actually happens to coincide with the intersection point from previously. And we can see also here there was a top in the market, and it's often known that previous tops will often become new lows. That's exactly what we saw occurring here. And then last week we discussed the potential for a minor turn factor coming in here. And what we saw is the market came in and was moving up fairly aggressively, and it came to a small halt where it wasn't able to hold the strong gains from yesterday. And today's a bit muted as well. So simply what we would look for here is for the market to perhaps taper down just a little bit before turning back up again if this market is truly as strong as it looks like it wants to be. March beans is moving in a similar fashion where we've had key resistance up at about 1069. Our next key resistance above will be at 1085.5 with the potential for the market to move up to about 1100. We have been overbought, and we can see where the market came in and was overbought. We saw a small decline down into support near 1036 3/4. The market has moved up from there, and we can see the market move down slightly on the stochastic but has turned back up again. And what we're looking at here is for the potential for the stochastic to turn back down at either resistance where we are right now for a small double top, or again near that 1085.5 number. So it'll be interesting to see what we do over the next coming days with the upcoming report that's due. Wheat futures finds itself in quite the precarious predicament. Last week, we talked about how a perfect square out in time and price came in to give us a very good decline. We can also see here how the market did a very good job of tracing out a previously projected trend line on the way down. In addition to that, we can see that the market found good support when it broke off of that level and came right back up into that particular trend line. But what we're looking at today of great importance is the range that we saw from this previous high down to this low that came in at about 34.5. It took it 22 bars or 22 trading days for that move to the downside to occur. But from the recent high that we see here on November 22nd down to the most recent low a few days ago, the same range or even more than that range, it only took it 6 days. That's an indication of increased weakness. And what we're looking at right now is key support at about 395 and a quarter. As long as this market's able to hold above 385 and 3/4, we anticipate that this is going to be a very key low going forward for this contract. Breaking below 385 and 3/4 would imply great weakness and for the market to really head down lower. But if we're able to hold inside of this area over the next couple of weeks, a move to the upside then becomes more promising and more probable. And we anticipate that this is going to be the key area that we want to continue to watch to tell us whether or not wheat has finished its move to the downside. The weakness that presented itself last week pushed our volatility-based resistance bands to the downside, and so we can see the potential for increased weakness. So these bands need to turn back up to the upside if we're to find some good strength for this contract. Right now, the top end of the band is right inside of that region that we discussed between 395 and 386. And so again, that 385 to 386 area continues to be the important zone that we'll continue to monitor to give us a heads up as to where the strength lives for this contract. Crude oil has been the recipient of some profit taking over the last couple of days. As the market has come in after the OPEC agreement that was announced, we can see the very good strength that came in for this market. Recently, we see that the market actually made a marginal new high beyond the previous double top that we saw from several weeks ago. And it's not uncommon to see the market come in after retesting previous highs to find a bit of resistance. We have resistance up ahead at 55.74, and that's where we think the market would go at a minimum given the strength of the move that we've seen. And it's a good opportunity on pullbacks here for a potential buy opportunity. Currently, the market sits at support at about 52, but downside support probably at about the $50 mark or 50.76 will be key. In the past, we can see how previous highs continue to be highs, and so previous highs then can become forward-coming lows. So if the market continues to drag back down, we wouldn't be surprised to see it come in and tag near that 50.76 number. And if it breaks below there, then the key support we'd be looking at for a potential buy back to the upside would be about 48.50 or 49 or so. For now, we'll continue to simply watch as the market trades along. But again, it's not uncommon to see a small little pullback come in given the nature of the move that we've seen. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.